What's going on, everybody? It's your boy C-Zar, and we are doing a bit of a different video today. We're going to do a little C-Zar versus another YouTuber video. I don't like the idea of this video. I don't intend to make videos like this a regular thing. I've never made a video like this before, but I am going to do it now because we were talking about this YouTuber, Data Dash, Nicholas Mervin, in the Discord. One of my viewers posted it in the Discord, posted this video that we're gonna dissect and poke fun of a little bit. I want to say first and foremost, I respect Nicholas Mervins as a crypto YouTuber, and as an analyst and as a reporter on crypto as a whole. I think he's a good guy. I really do think he's a good guy. He seems like a good guy and a smart individual. And I want to just say, you know, this is not meant to be a combative video. Again, I don't intend to do videos like this, but I just felt so. I saw a few things that were just very significant holes in the logic of this video and the whole perspective of the video that we're going to poke holes in here, and I'll let you guys be the judge, right? I'm not going to go too crazy with it. Hopefully it's a very quick video here, and I'll be on with my normal Bitcoin analysis later tonight. This isn't just the general analysis, but you know, again, I think Nicholas Mervins, again, I think he's a great guy. I think he's a good reporter on crypto and even a decent analyst at times. I don't think he's the best analyst in crypto, and I think that we're going to see that going forward. Okay, he misses some things. A lot of analysts do. There's plenty of analysts that they just see what they want to see, and sometimes that happens even to the best ones. A lot of analysts are like this, though, where they just see what they want to see and they ignore the underlying details. So if that sounds good to you, hit the like button, subscribe if you want to see more content like this. Let's get into it, okay? Let's get rid of my big face here. We're going to play this real quick, and I'm going to pause the mic. I think you guys should be able to hear this if I mute the mic.
Purchase that was a big reason why strike price, right? Well, they made that huge purchase that was a big reason why we had the performance we had in November.
So what he's saying right here, what Nicholas Mervins is saying right here, he's talking about MicroStrategy. They made a huge purchase in November, and that was, he's saying it word for word, I'll replay it. He's saying that this is a huge reason, a major reason why Bitcoin pumped in November, was that this huge purchase was made by MicroStrategy. This whole chart right here is MicroStrategy's holdings chart and purchase history, right? So you can see there was a big spike here. He's saying that that was the reason why we had this big move up in November. It's not true. This is a moment where he literally is cherry picking the data, and it looks right. It sounds right. If you don't pay attention, it all makes sense. But if we look here, watch whenever he goes over this little bit right here. That's November 11th. The next available day he gets, that's November 18th. Watch. We'll show it. Ready? Oh, let's see here. I want to make sure my face is not up and you guys can actually see the screen because I'm doing things a little. Okay, you can. Okay, good. Okay, I'm going to mute it. We're going to play it. Let's see here. See his little bit of acne on the face there. It's okay though, Nick. It's diet related, man. November 11th, right there. I don't know if you guys noticed, but before MicroStrategy made this huge purchase, it might have made more of a purchase than it did in its relative like months and relative to like the whole year really from beforehand, right? It might have made a little bit of a purchase, but it made this huge purchase that he's referencing after the 11th, because at the 11th we were here, right? It was after the 11th that huge purchase came on. And if you see here, if we can pause it right there, November 18th, perfect. That's the next bubble, the next iteration. So November 11th to November 18th, they didn't make a purchase. November 11th to November 18th. Well, if you look at Bitcoin here, November 11th was this day here, which means MicroStrategy, November 11th, again, being the day that we saw this crux right here. So that was before a large purchase. The 11th was before a large purchase, which means MicroStrategy bought after this day, right? Because that huge purchase came in on the 18th, which means that Nicholas Mervin, what you just said there, man, was that MicroStrategy buying was a huge reason for this pump. And that's the whole thesis to his kind of video here too, is that now that MicroStrategy's pulling back, that we don't need a pump. But hold up, guys. If you look at this real quick too, another hole that we can poke in there is MicroStrategy did not buy basically from the middle of 2021 all the way, and I mean they slowly accumulating, right? But nothing too significant until 2024. Well, we had a bull run from January 2023 up until April of 2024, right? We had a pretty decent bull run until then. MicroStrategy didn't need to be a huge influence. They are a huge influence in the markets, but they're not the we don't need MicroStrategy for Bitcoin to go up. That's something right here. This whole video, this whole premise is that there are institutional players involved in Bitcoin's crypto cycle, and there are, but the thing is guys, we don't need the institutions. We don't need MicroStrategy, ETFs, Donald Trump making Bitcoin a Bitcoin reserve in the United States. We don't need any of that shit. Bitcoin's going to be worth millions of dollars or billions of dollars without any of it. We don't need them. They need us, right? And a lot of people in crypto have forgotten that. We don't need the institutions. They need us. The crypto sphere is the new advancing technology. The institutional financial system is the outdated tech. They need us. We don't need them. Okay, that's just to be clear. So, and the reason I'm emphasizing that at all is that's the whole premise to this video, is that without these institutional players, we're screwed. And that's not the truth at all. And beyond that, the 18th was whenever we actually started to take off, and the 18th was well after we had the majority of this move. So I spent a lot of time on that one point. Let's go to the next point. Okay, the next point was basically somewhere around nine minutes. I'm gonna play it from 9 minutes, and then we'll just pause. I don't even remember what the next point was. I just wrote down 9 minutes, so we'll see here. I'm gonna mute myself.
It cannot go down. Money glitch. Wall Street is going to be for Bitcoin. It cannot go down. I think that is a fool's game. It is a foolish idea to ignore what the data science models are showing us, to ignore what data that we have seen is quite consistent is showing us here. It's showing us right now that short-term we're overbought. There is decay.
Okay, so this is one that I have an issue with, right? And this is one that this is probably what ignited me to make this video, genuinely. Was this right here, and I'm going to bring my big face up. Again, I'm not trying to be combative or start a fight with anybody. Nick Mervin's probably never even sees this video, to be fair, and also huge respect to the guy. I definitely do respect him, but I just want to say first and foremost, in this video, he doesn't explain what this indicator is. He doesn't explain what it is at all, what it's based off of at all. You can see the price in the white line here, and then here's his indicator, the main thing that he's got this red channel coming down on, and then this green channel for support. It looks very official. It looks like every time we've been in the red channel here, this very first peak, boom, all-time high for the cycle. Red peak here, boom, that was a pretty significant peak. And then the second peak, boom, all-time high for the cycle. First peak here, just boom, sold off in the red zone again. All-time high for the cycle. Peaked out here, except it really wasn't a peak this time, was it? It was kind of more of a meandering up here. It's a little bit different. But he doesn't mention that, does he? And then it wasn't the all-time high for the cycle. It was different. Isn't it funny he doesn't mention this? It's funny he fails to mention this, that every time you sold off immensely, and you got these blow-off tops to go with it. But last cycle, which was the only time we didn't get a blow-off top, was also the only time that we didn't actually, our all-time high, our top did not come in this overbought zone, showing that we can progress higher even after we move down. We're showing that we can progress. I just want to say this real quick, guys, and without trying to be too combative, I don't know what this indicator is based off of. All I know is based off the readings I'm seeing. I genuinely believe I know how to understand this indicator better than Nicholas Mervins does, and that's kind of sad, because it is his indicator. And I'm not trying to be combative. Again, it's not that. It's just I think he's a better reporter than he is an analyst. Even if this is his own indicator, I'm going to show you guys some stuff right here that he's not even aware of, because he doesn't mention it. But well, beyond the stuff that I'm talking about here, right? And this is mainly not to poke fun at Nick Mervins, but to hopefully guide anybody who might be misguided by this information. You see differences, right? And he acts like this red band is the overbought zone, but we don't know what this thing is to begin with. We don't know what this indicator is, so there's no overbought or oversold zones, nothing like that. What we know is not that this is the overbought zone, but this is a descending trend line. It's a descending trend line. Treat it like the RSI, right? This isn't the RSI, clearly. I don't know if this thing is range bound, if it can't go up or lower than a certain number or not, right? But I'm assuming that this is not a line that this indicator will never again cross above. It will in time cross above it. It's a trend line. It's not an overbought barrier, right? It's very clear to me this is not an oscillator that goes from like 0 to 1, back to 0, down to -1. It doesn't oscillate. It's got a trend in it. It's a trend. Trends can be broken. And if you notice this trend, selling off, selling off, selling off, selling off, selling off, but differently. And this time you did proceed to go higher even though you moved lower, which you've never done before, right? Immense sells off. It's like a tip, a little point in each one, and then here you lived in it. Well, here we're living in it. We're living in it this time, again, for the second time, right? But this time, here's the deal. One instance, one instance, one instance, one instance, one instance. Two instances, and both instances are not peaks. They're moments where we're living in here. You guys, this different behavior tells me that we're going to get different results. Different behavior than anything here. All these behavioral patterns that we got promoted the same results, except for this one, different behavior. This is even different behavior than that. It's more bullish looking. Look at what you're doing. Whenever you rejected out of the zone, look at how immensely you sold off each time. Even on this one where you came back up, where you had your second peak, look at how immensely you sold off. Here, you did not sell off immensely. You consolidated. And now you're breaking out. Okay, so that's the other thing. He doesn't even know how to read his own indicator. No offense, Nick. Don't even know how to read your own indicator, man. That's a problem. That's a problem, right? You shouldn't be talking about this. Watch this, guys. I'm telling you, in a month's time, you're going to see this break above his quote-unquote overbought zone. It's not an overbought zone. It's a trend line, and it's very clear that you're about to break that trend. It's absolutely clear. I'm telling you, and that's coming from the guy who's not seeing what he wants to see, but just seeing things at face value. You guys can determine that for yourselves, but I think it's clear that this is different. Now, the next thing and the final thing that I want to talk about is 10 minutes and 36 seconds. Okay, 10 minutes, 36 seconds here. Right here. What did he say?
This is something, again, we cover within the dashboard here. It's our newsletter on the channel. This month's article, we focused on a really big topic, which is essentially focusing on that next buy the dip opportunity in the market. Because if you are focused
right here, this is what it is, guys. He's literally he says this looks bullish right now in the charts, and he says it looks bearish. He says it looks bearish in the charts. Watch, he's going to say it looks bearish. And it looks bullish. I'll show you. I'll show you the same chart. And he's saying, and this is where it gets speculative. This is where people who poke fun at TA can say, you can show the same people the same chart, and one person will say it's bullish, one person will say it's bearish. People can have different opinions. There can be different reasons for it. But he's just seeing what he wants to see, and you'll be the determinant factor of that at the end of this, right? You tell me if what I'm saying is accurate, or if what he's saying is accurate. Am I seeing what I want to see, or is he seeing what he wants to see? And I think it's very obvious. Just wait. Just watch. Okay. Hold on. We're almost done here, guys.
on crypto right now, you'd be thinking that we're ready for the next leg up. If you're looking across the board at other asset classes, you're seeing some weakening signs here. One of them predominantly is the performance of the broad indices, especially the S&P 500, which has a broad measurement of the performance of the top 500 stocks in the market. We can see similar signs to Bitcoin, struggling at that 21-day moving average. But beyond that, we have the 100-day and 200-day very close.
Okay, so to be fair, when I watched this, I thought this was Bitcoin he was looking at, not the S&P, but I'm sure we can apply this to the S&P too, and we'll figure it out from there. But if you look here, if you look at what he's comparing, he's saying we're starting to show some bearish signs now. Look at what we're doing. All we are is below the yellow line, which, by the way, last time was great, last time was great, last time was great, last time was great. All great times to buy. The only difference is, you know, here we didn't touch the purple line. Here we're kind of close to it. Here we didn't touch it, but we got close to it. Here we went below it. And then here we didn't touch it either, but we got close to it. But this is the most common kind of structure that we have compared to any of these drops that we do here. He's saying this is bearish, but really this looks identical to what we were doing down here. It looks identical to it. It's perfect. It's literally tit for tat perfect. You had your uptrend coming up, holding above the yellow line for the most part right here, pulled all the way down to your purple line, but you didn't touch it, pulled all the way down to your purple line, didn't touch it. You had a 1 double bottom, a 1-2 bounce. You have a 1-2 bounce, kind of here, double bottom. Your dark purple line and then your light purple line here, your light purple line crosses above the dark purple line. Right here at the bottom when you're below these yellow and green lines. The white purple line here, if you moved his mouse, if you move your mouse, you can see it's going to cross the purple line, just like this last time. And then look, the white purple line here crosses the dark purple line over here at this low too. Right? The white purple line, it crosses the dark purple line here, right here too. It crosses it at every single one of these lows, and he says it's bearish. And then here's the last thing. What really, and this is what I thought it was on Bitcoin, but it's not, it's the S&P, but this, the 200 weekly moving average, exponential moving average crossing above the simple, it says 200 weekly EMA, and then this is the 200 weekly SMA. He's on the daily time frame, so this is more of a like customized indicator that puts the weekly time frame on there even when you're on the daily time frame, right? But 200 weekly EMA, 200 weekly SMA, okay, and that's for the S&P 500, and it crossed, right? That's the important part. The weekly EMA crossed above the SMA. I want to point that out. Okay, let's look at the S&P real quick. SPX here. We're going to put on the 200 SMA. Is it over here? Because I had it. Maybe it is. It's just here. Whatever. 200 SMA, and then a 200 EMA, and then we'll be done with this video. Okay. And then blue and green are our colors, right? The EMA, the blue line, when it crosses above the green line, that's the cross right here, right? We're on a daily time frame, weekly time frame, right? It's down here, right? Because again, this is the weekly time frame. It's all the way down here. It looks different because it's on the weekly time frame, where in Nick's video it's on the daily time frame, but these are the same EMAs, right? All the way down, you can see here at 4,600 basically. These are all the way down here right at 4,600. It's the same thing. So I wonder, we got this cross. He says we have bearish conditions, right? And beyond everything else that I said, which signals that really we're just at another higher low. It looks very, very similar to this, and there's a lot of similarities to every other low that we've had here. But the cross, this is another thing, right? He says it looks bearish, but I don't know what about this looks bearish. And then the cross here, this adds to it, okay? We're on the weekly time frame. The blue line crossing above the green line, has that ever been a good thing? Well, I can tell you the blue line crossing below the green line here, it resulted in a momentary good thing and then a bad thing, I guess, to be completely fair. Not really so conclusive. If anything, that might be more conclusive that it's a good thing, but let's just see. Blue line here, crossing above the green line, right? It actually did not cross above it. It was still above it. So it was coming down to meet the green line, but it didn't cross. That doesn't count. Here we go. Here's a cross. Here's an actual cross right there. Okay. Because, and again, I promise you I'm not cherry picking. If you zoom in, I can just see it, right? It doesn't cross. They actually don't technically get across, to be completely fair. So that wouldn't be accurate information. Here was a cross. The last time we had a cross, let's just put it right there, okay? Last time that we had a cross, and by the way, anytime these lines cross for Bitcoin, that's bullish, right? That's the point I thought I was going to make, was that it was for Bitcoin, but it's for the SPX. SPX crossing, you know, it was bearish momentarily after this, but the cross actually gave us a pretty bullish month afterwards. It led to a pump, to be completely fair. The cross led to a pump, and we saw higher prices thereon afterwards as well. The last time we had a cross before that, this cross here, kind of bearish, to be completely fair, and then also led to more bearishness, so that's not really too conclusive. That's a bearish cross, not a bullish cross, so we won't count that. Bullish cross here led to bullish behavior, kind of the beginning of an uptrend. Kind of inconclusive. I really did think this part was on, the cross was for Bitcoin, not for the SPX. And I was going to show you guys that every time we've had a bullish cross for Bitcoin, it's been good. But here too, it seems we had one bad time, and then every other time, 3 out of 4 have been good, 1 out of 4 has been bad. So I think that's enough iterations. All that to say though, right, he says in this last part, I'm going to pause myself again. We're just going to play it one more time, okay? Are you ready for it? You guys ready for it? Here we go.
This is something, again, that we cover within the dashboard here. It's our newsletter on the channel. This month's article, we focused on a really big topic, which is essentially focusing on that next buy the dip opportunity in the market. Because if you were focused on crypto right now, you'd be thinking that we're ready for the next leg up. If you're looking across the board at other asset classes, you're seeing some weakening signs here.
What weakening signs? What weakening signs? What? Tell me. I want to know, right? And you tell me. You tell me. Do you see weakening signs, or do you see strengthening signs after this video? This video went on way longer than I wanted it to. Probably will never make a video like this again. Hit that like button, subscribe. Nick Mervins, don't hate me. Bye-bye.